Welcome to this week's webinar. Hope you are having a terrific day. Wait another minute or two just to let everybody come in. Again, this week we are going to be doing another values-based webinar about investing per your Christian values. Our take on it, I think some good insight generally, and also how we do it, and a little bit kind of inside peek at that. So again, welcome if you're just funneling in. We'll give everybody a minute more, then we'll go ahead and get started about right on time. So hopefully you had a terrific or good Thanksgiving with your friends and family and made some more good memories. And we are moving right along after our thankful things to be thankful for seminar into our Christian values webinar coming right the week before Christmas. So very timely. And then our next webinar will be getting a jump start on the new year. So again, welcome if you are just coming in or if you're watching this on demand. We're very happy to help you or to have you. And I think you're going to enjoy this webinar and hopefully learn some things that you may not have known before, some opportunities that you may have as a person of faith, or something to share with someone who this might be able to help. And we are privileged and humbled to be able to provide that for you. So let's go ahead and get started. I'm going to start sharing my screen for you so you can see my presentation. Again, if you just came in, welcome. This week's webinar is, I'm a Christian, can and should I invest for my beliefs? And I think this is very important because I have been doing values-based investing for our clients for over 2 decades. And ironically, I wouldn't even say ironically, sadly, per all the groups of people that we serve, so Christians, Muslim faith-based, which is halal investing, and also our ESG, which is kind of the more secular, we have gotten the least traction on Christian-based investing. And so we have continued to work to make it better, to get the word out. And so this is another effort to help connect with people and show people how this can work and be good, deliver awesome returns, and get things more aligned with you. So we want you to think, clearly, faithfully, confidently about whether and how your investments can align with your beliefs. And this is without shame, without fear, to learn, and it's not financial sabotage. Okay, so always when I'm going to talk about investments we got to put our disclosure on here. So I try to do a very good job of putting together presentations. They are timely, they are unique. I don't use templated stuff. And so we look up all of the information and we build good presentations. But again, I can't, warranty the completeness or total accuracy of everything. Please look things up for yourself. Please look to your CPA or tax professional, financial advisor, attorney, etc., to make sure that everything is right, and that even if it is, that it works for your personal situation. Okay. And then additionally, I am going to show you some investment things inside of here. Past performance is not a promise of the future. They're not guaranteed. It's just a snapshot of the past. Different things can happen in the future. Okay. So, most Christians would agree that faith should shape how we live and love and work. And a lot of investing often feels abstract and disconnected. And it seems like that is like one thing we do. We live our life this way and we go to church, and our investments in our 401k or your IRA or your Roth IRA or wherever they are a different thing. And then if you become successful and wealthier, then maybe you'll donate more to the church or charity, or tithe more intentionally whereas it may not be as perfect because it's harder getting by now. And so then your investments a lot of times, feel disconnected, right? You live your life and you believe one way, and all these things are going a different way. And then a lot of times, investment professionals and financial planners and accountants, even if they are religious or Christian or, your specific denomination, that connection is just not there of connecting those dots together. And so, you know, how does this make people, feel? Many believers fear underperformance. And I think that is the biggest thing that I've seen over the last, 10 to 25 years. It's probably only been in the last 10 to 15 where I've really tried to offer more on the religious side versus before we just called it SRI or socially responsible investing. And anybody that had a conscience, that's just where we were directing them to a few funds that did this. And now it's just getting better and better into not bucketing people into huge buckets of shared values. And so, again, fearing that underperformance and how to translate their beliefs or scripture into how modern markets work and how you have access to them and invest, especially when a lot of 401ks don't even give you a lot of choice to the fund lineup, makes us, like I had said before, either feel disconnected or feel guilty that we're not aligning these things and sometimes investing in things that they don't believe in or enabling them, et cetera. So, tensions are common and it's understandable. And of course, I don't think people want to be judged. So if you invest per your values, per your religious beliefs, are people going to judge you like, oh my gosh, why are you doing that? Why are you trying to enforce something on someone else? Or the opposite of like, oh, that's not good enough. How does that align? That's not, and so it's tough to say, man, it kind of feels like I'm wrong one way and I'm wrong the other way, regardless. And so beyond that, I think these are a lot of things, that people feel that helps to unfortunately stop them from taking this step. And so again, what is values-based investing? Because it's a whole thing. And so whether we're talking about religious values or like I said, kind of more of the SRI, which is socially responsible investments, or ESG, which it's kind of evolved into, which is environmental, socially conscious, good governance. Um, value-based investing, um, is investing intentionally per how you believe to try to make the world a better place per your values. Okay, so instead of just passively kind of going through life, and then if you're successful, maybe giving some away, which you can absolutely still do and should do, I think. You are also enabling people and organizations and to flourish and do better, and you're not necessarily profiting off the things that you don't believe in, as well. And so it's about direction and alignment, and using your capital intentionally. And again, what we will get into a little bit later is stewardship. I'm a big believer in that. Another thing that I like to put out there when we're doing these webinars is feel free to put out questions in the chat as we go. Sometimes I'll hit them as we go. Sometimes I'll save them for the end. But it's always good to have them in here, because a lot of times when I get to the end, I don't wait forever for questions. And if you forget, or it takes a long time for you to remember and type it in, sometimes we'll end the webinar before. And I want to make sure that we answer your questions. If you're on here on demand and you put in a question, we still try to answer that. So, even if you're watching this on demand, ask a question. We do like them. We like to help you. And these are unique webinars that we're really trying to teach something that we're passionate about as well. So, why people choose to do values-based investing? Because when you choose to do this, whether, again, like what we were talking about, whether it's going to be Christian or halal or ESG, you as a big group of people, have chosen to do something good in the world. I feel like a step beyond just believing in it. It's another thing we're doing to do something about it. And so, we're talking about motivation and not necessarily activism, right? And so we're not going to change the world overnight. We're doing it because, we want consistency between belief and behavior. And so stewardship, integrity, long-term thinking are Christian virtues, and investing is one place that they can show up. So it's dynamism to be able to do things and not just go to church or try, to what would Jesus do, right? In our personal lives on a person-to-person um, basis, which absolutely I think is fundamental and you should do as well. But what we're talking about is that dynamism to be doing lots of things, right? And part of having money and growing and investing it is that passive nature of it continuing to grow and do good, even when you don't have to continue to put effort into it. So that's kind of when you're saving for your retirement. And you may be investing and saving for other financial goals as well, but most Americans, probably the biggest one is retirement, is that's the point of it. You're going to save it, you're going to grow it until it gets big enough. So you're working for money. You're taking a part of that money that you work for and putting it in investments that when they grow enough, then it's going to work for you to be able to pay you so that you don't have to work anymore. And so just like that with values, we can take our passive investments, even when you're not actively out there doing good, they're out there doing good all the time. And the more we build it up and compound it, the more and more powerful it is, right? And so, we see these things just as I talked about, your personal integrity, moral consistency, stewardship, and responsibility and long-term risk awareness. Personally, I very much like the concept of stewardship in the financial realm, that we can trust each other, that we take care of the things that we were entrusted with. And of course, as stewards of our clients' money, beyond how we're looking at it here through the lens of Christianity, is very important to us in both realms. So how's it done? How do we actually implement values-based investing? And so, this slide's important because it shows it's not mystical or emotional. We use screening and weighting and engagement and portfolio construction to bring all of this together. And so when we talk about screening, this is probably the oldest way, screening and weighting together, of through the information that we have available. Some of that's provided by third party rating and research companies like Morningstar and MSCI, and there are various different sources for data, and a lot of them will draw that data from publicly available information or the filings and disclosures of the companies that do disclose them. We can figure out who's doing what, for what purposes, how do they do it, etc. And then once we get that data, then we can screen out. That's the negative. We can avoid industries, or we can avoid individual companies, or this is probably a little bit newer because this was, screening out was the main thing before, but then we have positive screening, so it's overweight or prioritized towards certain things, that align with your values. And then of course that gets into weighting, and so putting different emphasis for different sets of values that different people have. And when we put these things together, we can build a much better portfolio that aligns with your values. And then depending on how strongly you believe in kind of implementing this, is like how strong it is. And so what we mean by that, in the investment world, when we build portfolios, we call it tracking error. And so we can, if values are the most important thing and rate of return is not necessarily the highest thing, then we might weight really hard towards the values, and your account can go up and down different than just how the regular benchmarks or stock market does, right? And so if it's lighter, you might go right along with the markets and you can still have a values-based portfolio. So we combine these things together very overtly when we build these things for clients. And so that's two things. And then engagement and proxy voting. So some of the fund managers that you can use will vote proxies based on the values that the shareholders want from them. So if you have an ESG fund, or you have a fund that's explicitly Catholic, then they can vote per what the beliefs are and what their mandate is. Unfortunately, in practice, a lot of them don't necessarily take this as far as I think most investors would like, just because, especially in today's environment where the legislature and the government in general is a little bit anti to the values-based investing. Overtly they say just ESG and the DEI stuff, but it could be anything. They're saying, hey, if you're managing money for people and you're not just trying to maximize profits, then that's wrong. Okay. And so, I absolutely do not agree with that. But they're right now kind of leaning more towards interpreting like being a fiduciary as only making the most money. And so in values based investing, sometimes as a steward or as a leader, um, say, as an employer, you might be um, a biblical or faith-based employer. Part of your mandate is to take care of probably your employees, your flock, etc., and not necessarily just to make the most money and pay them the least, right? And so this is an important thing. And I don't think that a lot of people would necessarily think that you're going to make less money in the long term because you did that. I think a lot of people would say, hey, this is what we're supposed to do. We're supposed to take care of people. They're going to work harder and they're going to be better stewards of our resources and take care of our clients and work harder. And I actually think we'll do better in the long term. So that is the values-based argument in that. But a lot of times right now, that's kind of not getting as much, I think, importance that it should. And a lot of these managers and stuff will vote more for profit maximization, even though they might be doing the screenings and the weightings inside of there. So I think this is an important thing, because if we own all these publicly traded companies, as Americans in our retirement accounts, et cetera, generally through our funds. But most of us, we don't read those big books, the different prospectuses and filings that the individual companies do, and then vote at, the proxy meetings. And so a lot of these board of directors and CEOs and executive staff are doing whatever they want, right? And they're mainly just maximizing profits as opposed to following any kind of moral or ethical mandate or what so. And they should, even if they don't believe exactly the same way as us, they should take that into consideration, because they are stewards for us. We should have. And then portfolio construction. So after we have done all this screening, figured out everything, how do we put the eggs in different baskets so that the asset allocation of the entire portfolio goes along with what more of the markets do? And that's exactly what we started with in terms of talking about. We don't necessarily have to sacrifice rate of return to invest per our beliefs. And this portfolio construction is very key in being able to do that, regardless if we did all these things before that did put it in line with how you believe. So again, feel free to throw your questions in as we go. Happy to have them. So, I started to talk about this in the last slide. It's like, how did values-based investing evolved? And so, early exclusion principles. And so, faith-based investing probably is kind of the earliest. It just wasn't standardized in terms of the modern investment vehicles like mutual funds and now ETFs, et cetera. But of course, faith goes back way, way long, back into our history, at least a couple thousand years. And so there were individuals in small application applying early like exclusionary principles and even what we call impact investing to invest in endeavors and things that aligned with religious beliefs and what so. Then more kind of institutionally rising was more along the ESG framework. So again, like I had said earlier, that started as socially responsible investing, and over time, it has gotten more of a secular type flair and assumptions, and a lot of Christians might question that, and it's not necessarily the way they want to go, especially how we've come along the last 8 years to almost politicize it, which is unfortunate. And then increased data and transparency. This is the thing that's really kind of exciting and making things better, to where instead of trying to put people in buckets to where politicians can set us against each other and put labels on things or what, so we can start to build very individualized portfolios for people, to model and help their investments align with exactly how they believe. Because I think most people have a more complex and nuanced belief system than necessarily just a set thing that just goes into 3 or 4 different buckets. And so there's increased data, being able to get that for a reasonable price and to be able to use it to build kind of innovative, customized things is very exciting, which is leading to better implementation. And this is one of the things that I've really enjoyed over the last 20 years is, it did, 20, 25 years ago when I did implement the SRI portfolios, or more values-based, however we could get it, it was a good bit more expensive. A regular portfolio of just trying to pick the best investments for the lowest cost and having no kind of values-based stint to it, might have cost like 0.8 to 1.2%. And a ESG portfolio or a Christian values-based portfolio might have been pushing 1.5 to 2%, right? And then over time, it's just come down to where, now on when we're building like ETF portfolios and what's so, our ultra low cost, like traditional portfolios are at like 0.1 to 0.2%. Our ESG is about exactly the same thing of that. Our Christian values, pushing 0.3 to 0.5%. So it's still a little bit more expensive, but not a whole lot more, right? And that's coming down. We just need more people, more people to come into it, raise the economy of scale, and that will continue to drive costs even lower. And so that's awesome, right? And so again, even cost wise, 0.2% is not that much more. And I don't even think, that divergence of increase fee will last that much longer. And so when we look at this, we can say, what's the difference between faith-based and ESG? And so there is some critical difference here. I would like more of all of our clients that are values-based to see each other as more aligned than different. You are absolutely unique and beautiful, whichever camp you fall into, or maybe you have some of the beliefs from both. But you probably have a lot more in common than people that don't want to do values-based investing at all. You both believe in making a better world. You just have a little bit different, ideology versus theology, but a lot of that goes hand in hand to a certain degree. And so you can kind of see here, oops, sorry, me on do not disturb. So, ESG especially has done great for us when we're doing Christian values, because, it has really provided the economy of scale in the framework of providing all this data. And now we're seeing to where we can get more data to where we can build customized stuff, for a lot of the different Christian values. Because if nobody's going to report on it and nobody's going to collect it and nobody's going to standardize it, how do we screen? How do we do more? How do we vote proxies if these issues aren't even coming up? And so ESG has done a great job of like almost developing the framework to where we can be able to do this for almost any values base. But it's not a worldview. Christianity is. There's overlap, dignity and justice, stewardship, but there's divergent. So faith-based investing can selectively use the ESG tools that we talked about while remaining grounded more in theology rather than ideology. And so, if you think about these things, it's like ESG is about metrics and environmental practices, labor practices, governance structures, social outcomes, and that information is useful, but it doesn't answer why something is good, what the ultimate good is, or who gets to define it. Christianity does. Theology makes claims about human dignity, why people matter, moral authority, where right and wrong come from, purpose, what we're ultimately aiming towards and why we're here, right? So ESG measures behavior, Christianity defines meaning, morality, and ends. And so, in that respect, they are both basically aiming at good. They just disagree a little bit on the details, and ESG doesn't necessarily give you the backstory of why, um, of what's going on. And so, in that respect, they both can be doing good, but they're not the same thing. And it's why we don't just try to push our Christian clients into just ESG investing. Now, ideally, and I'll get to this kind of at the end, we want to open it up for people to choose anything because maybe there are a few of the ESG things that our Christian clients agree with that they would like considered on top of their Protestant or Catholic or whichever denomination you might be. And so again, we get very um, curated and unique, customized portfolios for each one of our clients. So the goal of faith-based investing isn't to reject ESG data, it's but to use it selectively as a tool. And so then you'll keep the theology, not just the ideology, as the foundation, and that data helps us to be able to actually build it. So it's actually a good thing. So what is Christian values investing? It isn't about good companies versus bad companies. It's about applying biblical wisdom, stewardship, human dignity, justice to real world capital allocation, and recognizing that we live in an imperfect economy and that we do live in a pluralistic society that has lots of different people, but we still need to live how we believe, and we can do that and um, absolutely make a great rate of return to help accomplish all your other financial goals. And so when we talk about applying principles, so bringing a lot of the scripture wisdom about stewardship and justice and human dignity in terms of how we put it into different companies or funds or ETFs, however, whatever vehicle we use to do that, and then looking for consistent practices. And companies may go in and out of favor, so you got to keep up with that as well too, not just kind of do research one time and then think that it's good forever. So let's drive on. And so when we look at this, the Bible doesn't give a model portfolio of saying invest in these things, here's the framework of how to implement that stewardship, wisdom, accountability, faithfulness, and outward impact. You have to orient how you think, not just what to exclude, right? And so, like I said before, I really like the concept of stewardship. And so, we've put in a few of the passages from the Bible that kind of, hit each of these so that you can kind of pull them in. So when you think about that, stewardship, it says the earth is the Lord's and everything in it. We manage God's resources, not our own. And so again, how I feel about that all the time, I tell a lot of the people that work here is like, we're stewards for our clients. We have to do right and do well. And they know that they can intrinsically trust us. And so in that respect, with everything that you have, and you have, been blessed to be able to accumulate and be trusted with, you are a steward of everything you have. And eventually that will be someone else's in the future, whether it be your children or your community or your church, etc. And hopefully we leave more and better than what we found or were able to put together during our lifetimes. And that gives you the next one here, impact beyond yourself, and, use whatever gift you have received to serve others. And that's awesome. I think a lot of times, when you give, you end up getting a lot more back. And I think when you practice like what we're talking about, it's just another step in it. So not only, again, communicating in your community and in your church, helping individual people, but also how you're investing your money and supporting other organizations. And these things are compounding and flourishing all around, so wisdom and prudence, to to use your financial management and organization, to honor God, and accountability. I think a lot of people are not doing this. They're not accountable for how they are building up their wealth or using it or enabling the capital structure or formations of new businesses and people that want to make the world a better place. I mean, now again, this is a blanket statement, but I think, almost the antithesis of like helping a lot of people and doing right for all the stakeholders is private equity, right? They're really out there just to maximize profit to a very large extent at the expense of a lot of the other stakeholders in this world, whether it be employees or customers, or business partners, et cetera. And a lot of people would say, well, no, I work for one, or I did this and we never did that. It's like, really? When you really look at, if you are really shooting to make 15, to 50% ROI per year, it's very, without like productivity gains from technology, and some companies can do that just based on that, but it's rare. You have to take that from someone else, from one of the other, stakeholders in the pie. And so, in that perspective, to have that pressure to perform that high on a consistent basis, you're sacrificing something. So again, we have the choice of how we invest to say, are we going to support that or are we not? And even if we want access to a certain pool of money that generally has that negative connotation, there are still some good actors out there, that are doing right and really trying to help others, and following a lot of the values and faith and what so, that align with what we want. And so that goes right along with this, faithfulness in all things, and can be trusted to care about the things that you were taught based on your denomination and faith, et cetera. And kind of digging a little bit into what's the differences, right? And so I think this is one of the pitfalls that I fell into when I first started getting more into trying to do values based for Christian, is we just had, a Christian strategy, but there's so much difference. And I think the biggest split is really between Protestantism and Catholicism. But of course, there's all the different Protestant denominations as well too. But not everybody aligns on everything. So, you could see these are common screens. So abortion or abortion related activities. So whether that be straight up abortions or drugs or clinics, funding, advocacy, et cetera. Pornography and sexual exploitation. So, you know, this is rampant in the world today, and there are so many things connected that a lot of people wouldn't even realize. And of course, what it really comes down to, I think, in the end, is the exploitation of other people for, kind of the lust and desire of other people, and obviously has a lot of negative connotations societally. Gambling, screaming out companies that are engaged in casino operations or platforms. And now we got the online stuff and the sports gambling, and then the associated things with that, and people that make money off of uh, the proliferation of it. Substance abuse has gotten a lot worse after COVID. And so excluding producers of, whether it be marijuana or tobacco or alcohol, addictive substances that harm humans. And then weapons of violence. This one's probably a little bit more, some people could leave it or take it. Some people will be will refine it down more to offensive versus defensive. To say, hey, I'm against offensive weapons. We don't need that, but we need to be able to protect ourselves and, from the wolves, etc. But again, common screens uh, that are out there. And so this is what I started to hint at before is, that I think this is the real, kind of differential, and not that there isn't a lot of unity, right? Because it's all in Christ and Christianity. But there is a very real difference um, between Catholicism and Protestantism, different sources of moral authority, the natural law versus conscience-based ethics, different treatment of life, institutional guidance versus individual discernment, uh, social teaching traditions that are very distinct from one another, and different hierarchies of moral issues, what's the most important and less important, etc. And then different comfort with even being associated with ESG. I might have turned some people off straight up talking about it from the beginning. And again, I'm not trying to force any of our clients into ESG. I only said that we have a lot of shared wanting the world to be better per how we believe, and that the work of some of the ESG stuff very much benefits us on the Christian values side of things to be able to implement a more theological approach. But still, when we look at the Catholic versus Protestant, it's the same faith. I think it's the same desire to honor God. It's just different paths of faithful application, right? So Catholics and Protestants are divided because one side cares about values and the other doesn't. They're divided because they answer the moral questions from different structures of authority. And so that difference naturally leads to different investment frameworks. And if we don't provide that, then unfortunately, we're going to make people probably not implement this. And that to me is sad, right? And so when we look at a Catholic investing framework, I'm just going to hit these little because I don't want to run out of time. And I apologize. I am not any kind of theologian, but I do want to make this a good presentation just so you understand, where things are coming from and how we're building things. And I think, at least broadly speaking, how things should be built. But when we look at the differences, so there's generally 7 big ones we look at, like source of moral authority. So from the Catholic perspective, moral authority comes from scripture and tradition and the magisterium, so the authority of the church. And then the ethical conclusions are formally articulated and codified. And so when we look at that from an investment perspective, that's more clear and official moral guidance consistent with the church, right? The second thing is natural law versus conscience-based. And so strong reliance on natural law, moral truths are objectively knowable. Ethics are universal, regardless of faith. And that leads to clear positions on life ethics and consistent screenings. Okay, so it's a little bit easier on the Catholic side to really make sure that the investments align because it's a little bit more objective and consistent and clear. Life ethics, this is generally a non-negotiable thing. So life ethics are the primary, absolute, and non-hierarchical. And so exclusion of abortion-related companies, embryonic stem cell research, euthanasia, advocacy is out, zero tolerance generally. Again, I can't put everybody in a box, but generally. So then, the fourth thing is, the role of institutions versus individual discernment. And so in the Catholic strategy side, trust in church institutions, bishops' conferences like the USCCB, and then that leads to very strong comfort in centralized moral guidance. And also it gives us a lot of clear guidance on proxy voting, so kind of institutional proxy voting. The fifth thing would be social teaching and economic emphasis. So strong tradition of Catholic social teaching So that's subsidiarity, solidarity, and common good. And so that emphasizes more worker protections, corporate responsibility, social justice as a structural component. And then the sixth thing, hierarchy of moral issues. And so the clear hierarchy is intrinsic evils, always wrong, prudential judgment, it's contextual, and investment screens often reflect that hierarchy. So the seventh and last thing, approach to ESG and secular frameworks. So it's often more cautious, filters ESG through church teaching. So use ESG selectively, but being very critical, a critical eye. Okay. Looking at it from the Protestant perspective or framework, or where we're building things and how we're trying to do it, emphasizes scripture and individual conviction, that freedom is powerful, and it also is challenging, right? Because no one's just going to tell you how it is generally. And it creates a lot more diversity, which is why you see a lot of the different denominations and even differences within the denominations, like you saw the Methodists break up not too long back in some of their more central beliefs. And so that makes personalization especially important because it is harder to put like just one strategy together. And so, from the Protestant perspective, kind of doing that 1 through 7 again. Number one, moral authority rests primarily in scripture alone, interpreted through one's own conscience, prayer, and community. And that application is decentralized. And so, as an investor, you would expect room for personal conviction, flexibility on secondary issues. And so, why this matters when we're comparing and contrasting is a Catholic investor may want alignment with official church teaching, whereas a Protestant investor may resist any institutional framework and that they feel is like institutionally imposed. Natural law versus conscience-based. We have an emphasis on biblical revelation and individual conscience before God. And so this allows greater diversity of faithful conclusions, more contextual decision-making. So again, contrasting, Catholic strategies tend to be more uniform and rule-based. Protestant strategies tend to be more principle-based and flexible. Life ethics, abortion, euthanasia, bioethics. This can be non-negotiable. It just depends on the person, denomination, beliefs, etc. I think there still is broad agreement on the sanctity of life, but different weighting on the indirect involvement and the degree of complexity. And so, some Protestant investors may accept softer screens and engagement on strategies instead of exclusion. And so, Catholic, like where we compare and contrast again on our Catholic portfolios, may view Protestant portfolios insufficiently strict, and Protestants may view Catholic portfolios as overly rigidly or exclusionary, or not necessarily representing their beliefs correctly in this area. So number 4, institutions versus individual. So the Protestants are skeptical of centralized authority, greater trust in personal study, and local church leadership. So again, we're not trying to cut the church out. It's just more local to the one that they subscribe to, and a preference for investor choice and customization. Social teaching and economic emphasis. Some more diverse views. Some emphasize free markets, others emphasize social reform. It's a less formalized economic doctrine. And so, again, kind of compare and contrast. A Catholic investor may worry that a Protestant strategy underweights labor dignity or structural justice. And a Protestant investor may worry that a Catholic strategy leans too far towards an institutional social policy or economic intervention. And so 6, hierarchy of moral issues, a greater debate over which orders are like first or the highest, and how to balance those competing goods. There's more room for disagreement. And then the last one, ESG and secular framework. Again, it just ranges widely. A lot of people A lot of Protestant will embrace ESG tools and just make it a part of things, and some people entirely reject them. So again, this kind of leads more towards what we are talking about of eventually we were getting very close to being able to build totally customized strategy for each individual person and not necessarily stick you into buckets per se. So again, throw your questions up here. If you have them, be happy to answer. And at least we have them for the end. The problem with one size fits all. Okay, so why so many Christians disengage? It was one of the largest religions in the world, and unfortunately, in the values-based world, is one of the smaller uh, groups where people are actually using the Christian-based investment strategies. And so, I think a lot of these screens oversimplify people's faith, and then, of course, those fears that we talked about before of underperformance and not being able to meet financial goals, and maybe even fear of judgment one way or the other. You put it all together, and uh, there's misalignment, and people don't trust, and um, uh, don't have the confidence to actually implement. And so we talked about kind of each of these things, but that's getting better, right? And so talking a little bit about how we approach this, and I did talk a little bit about the history, is early on, I was just building things to say, let's give people access to this. And, we'll have Christian and we'll have halal and we'll have ESG. And of course, at first I just started with just the SRI and ESG, but it's just like, why can't we empower everyone to invest per how they believe? And that really is our guiding light in doing all of this, is that we think that most people in the world are good people. They have their greater demons, they have their better angels. I think, unfortunately, a lot of our leaders today are talking a lot more, well, let's say this side, a lot more to the bad side of people and bringing that out into them instead of talking to their better angels and bringing the good side out to them. So for us, we want to empower more people to invest per their values. And we believe the more that people do that, the more that we engage with companies and vote proxies, and then the better the world will be, because now we do have stewardship, and now we do have leadership and authority where there was none, or only money and greed was leading things before, which I think most would agree. That is maybe the devil's work more. And so we started with these broad Christian values just out of the belief of trying to empower people. But we have been really working over time of like, why in that pursuit, not just ours, but in the entire industry, is there such low adoption, right? Why? I know people believe, why are we investing this way? And so we split into saying, all right, let's have a Catholic strategy, let's have a Protestant strategy so that we can split some of these. And we started to get a little bit more done. Still not near where we need to be. And I still think, especially on the Protestant side of things, that comes from, people having more nuanced beliefs. And I think individually, when things are private, a lot of our Catholic clients too would like to customize things, even though I'm sure they're very much in line with the higher church hierarchy, but still to have that ability to customize exactly what they believe in. And so, we're trying to listen to client convictions. We are getting very close. I think we just because of data sources, we've recently launched out our halal, the Muslim faith base. We're getting very close to launching out our Christian faith base to where we can customize. I hope to have this done by the beginning of the year, so in the first quarter. And then next year, by the end of the year, I would like to not even be bucketing like this at all. I would like people to be able to invest per their faith, whatever it is, on almost every line item, and we be able to build you a customized portfolio, regardless of how you feel and how you rank and would put. Now, we could have standardizations if people don't want to think about it too much, et cetera. And so, again, we've recognized that need for personalization, and I'm very much putting forward on it. And so, I put these here. And so, again, you got to take these with a grain of salt and remember the disclosures that I put at the beginning. These are Morningstar snapshots. Let me check my time. I want to make sure that I don't run out. So we got about 10 more minutes. Again, throw your questions in there. And if I don't get to them, I will follow up with you personally afterwards and send you an email answer or what. So if it's on demand, I do that as well too. But you can kind of see this is our more Protestant biblical strategy, and this is moderately aggressive. So that means, we try to do about a third conservative and the other 2/3 into the stock markets and like more growth oriented. But we have, aggressive, moderate, conservative, etc. And this is, I mean, I know these are overly complex for most people, but we try to build these portfolios very well that line up with our non that are, we call them traditional right now, since we've been driving low cost ETF adoption for the last 5 years. We call them ultra low cost, but you can see it's very close in terms of how we're putting the eggs in different baskets from 70/30 aggressive to conservative. And then this is a Morningstar box, so it just shows you how much we have in large companies and medium-sized companies and small companies. And then value, that's kind of the Warren Buffett style of investing, to try to buy good companies, but to buy them on sale. And then growth, that's kind of the opposite strategy of, hey, we want to buy the best, highest growing companies. We don't care if we pay extra as long as they're higher growing. And so you kind of have that, in between as well too. That's kind of the blend. And so then you have those strategies along with large, medium, and small. This is very important, how we put, how much we put in each egg in different baskets. So, the conservative things, international, US, large, medium, small, value to growth. These are all different eggs, right? And how we split these things up is very important. Unfortunately, right now, most people are concentrated in this one egg in this basket up here, large growth. This tends to be a lot of the Magnificent Seven, large growth tech companies. So it's very important, even if you're just watching this, to realize most people need to rebalance, even if it's to buy some more value or get some more small companies or get some more international. But I like to show you this because you can kind of see we do things very similar between all the different portfolios in terms of being 70/30 or thereabouts. They do fluctuate a little bit differently, but you can see rate of returns very similar. On these portfolios, you kind of see, here's, rate of return for our biblical, more Protestant. And again, I didn't take out an advisory fee here, so this is just showing net of the fund expenses. So if you did pay an advisor or something over top of that, that fee would come out of here as well. But you kind of look over the long term, and it's done about 8% per year, versus when we just look at the benchmark, and the benchmark's just putting in the same proportion of conservative to aggressive and international and small companies. So using like the S&P 500, the Russell 2000, the MSCI API, and the bond index, like what would you have gotten if you didn't pay anything and could invest perfectly in those indices? If you did that, then you would have made a little over 8.5% versus about 8% in our biblical Protestant. In the Christian or in the Catholic strategy, about 8.66 versus 8.57. So again, if you have an advisory fee, this would be lower. On our ultra low cost, we did estimate an advisory fee in here. You can kind of see it of about 0.65% or so. But you could see like 8.65 versus 8.66 versus 7.96. They're all very close. We're not sacrificing a lot of return here. So again, these are not perfect examples. The future will be different, more than likely, than the past. But again, what do we have? We have data to look back. And as long as we're being honest and doing a good job with this, we need things to judge how good things are. And there are other ways to look at things as well. I just wanted to show you this because I wanted to dispel a little bit, at least, people's misnomer that just because you invest per your values, you're going to make less. And that's not necessarily true. And you can kind of see, let me see on this one, on our Protestant, it's at about 0.64 expense ratio. And on the Catholic, it's about 0.6. On the ultra low cost, it's at 0.10. So again, it's getting lower. I mean, it wasn't just a couple, 3 years ago where we were almost at 1% on these. So the more that people push towards it, the more that the costs are coming down. The next thing we've been doing, that was kind of what was on my slideshow here, is we've been building these portfolios called plank portfolios. And if you actually go back, I did a pretty good webinar on this. How far back here was it? That talked about how we've built these plank portfolios over the last. I mean, I've been pushing towards it for 3 or 4 years, but we've really only gotten it out of beta in the last half a year or so, to where we can build individual stock portfolios for people, with companies. So if we're keeping our money at Altruist or Interactive Brokers, or Fidelity or Schwab, these are all different custodians. But if we're keeping it at ones that give us access to fractional shares with a good implementation of that, then before, to buy individual stock portfolios where we really got the eggs in different baskets, well, we might need $1 million to be able to buy one share of everything that we need to with high share prices, or prices per share. And so with fractional shares, though, we can do this as low as, depending on how aggressive or conservative which strategy pick, three to $15,000 per account. Like, this is very egalitarian. This is within the grasp of almost every American to be able to invest however they want in individual stock portfolios. And once we can get the individual stocks versus, like, here you can see like the funds that we're using, or the ETFs or what's, so you can see, we're using really good companies here. That we've had relationships a lot of times, like with Ave Maria, for a long time. But again, it's kind of going to be bucketed. When they're doing these big things for big groups of people and not individually making it, they may have to vote certain ways that may not align, especially on the Protestant side of things, where it's kind of like, what's that old saying, herding cats or what's so. But we have some great partners here as well too, with Timothy Plan and Inspire and Guidestone. If you work for a church or what's so, or in a 403b, Guidestone's been a great long-term partner building 403bs at churches, and what's so. But with our plank, we're able to, you can kind of see here, this is just showing you the top 10. We still have to use bond funds for the conservative part of it, because we haven't gotten fractional bonds yet. That is actually another pursuit that we're working on as well too. But you can see now we're buying the individual stocks inside of there. And then once we can figure out not only having the data and the KPIs to build portfolios based on this, but the ability to have questionnaires to understand how you believe, right? Without making it burdensome on you, then we can build our own bucket. You can see there's 246 different securities inside of here. And when we buy the individual stocks like this, we still got to use the bond funds, but we'll be able to drive everyone's portfolio expense down below 0.1%. And we don't currently charge any extra for our plain portfolios over just what our normal advisory fee is. We're very transparent on that. You can check it out over here when you look at our pricing, and it shows you our different client levels and what so. So I don't want to spend too much long on that, but I think our plank has so many opportunities for people, not only in reducing costs and optimizing things for people, allowing us to vote the individual proxies on the stocks, empowering you to invest per your values and your faith, etc. And then to see that, not just have blind faith that a certain fund or somebody is going to do what their title in the fund says. There's a old thing in our industry where when they were just flooding lots of money into the ESG, the environmental type stuff, people would just put solar or some kind of environmental or carbon thing in their name, but they really didn't do much. And they call it that greenwashing, right? And that can happen on any type of thing where people say that that it's biblical, but they're not doing that much, or they're just charging extra for it. And that to me is a dang shame, that someone is just making extra money off of your faith, instead of being a good steward and doing right to help empower you to live per your values, to be a good steward, to, again, different beliefs. I like this saying from a group that I'm in that says God as you know him or her, right? And so that's really what it is. So, customizing these things and using all the tools and stuff that we now have available. And so finding that common ground, maintaining your discernment, if it's not just following the institutional top line. If it is, we'll help you do that as well too. And rebalancing, getting away from drift, continually doing the research over and over again, multiple times a year, so that if something was, good and then it changed, we figure it out, we screen it in, put something else. There's so many options out there that, just remember, there's no automatic underperformance. When we do this, we still want to put our eggs in different baskets in almost the same way we would if we weren't doing value faith-based investing. And then costs matter a lot when you invest. If you're going to pay 1 or 2% for something versus if we can pay 0.1%, all other variables being equal, you're going to make 1.9% less, right? That's a lot of money when you compound over time. And so just being disciplined over time, don't jump from one thing to another, find a good implementation. And as long as it continues to be a good implementation, stick with it, regardless of who you do it through, because you'll have different cycles of where you may be underperforming or down, and then you may have where the wave turns around and you're ahead. And over time, if they're doing a good job for a good cost, it should average out. Okay. So we're running out of time. I really appreciate you spending your time with us. Again, you don't got to do everything at once. Find a good partner. You can do a partial allocation. You don't have to put all your investments or accounts into something like what we're talking about here. Even with our clients, we have different strategies and values-based things. And when people are learning about doing, they're like, let's do my Roth IRA like this, and let's see how this works. And if I feel comfortable about it, we'll do more. So gradually transition into there. You can have different strategies. And then eventually, if you see that everything's working pretty good, you can go more towards the one that actually fits you just as well, that is still accomplishing all your goals. And really pay attention to tax efficiency, because you can accomplish a lot of the same things with different tax outcomes. And taxes are a little bit better now than they have been in the past. But with all of our deficit spending and debt, et cetera, I would expect this to go up in the future, especially if you're successful continuing to grow your money and being a good steward. So I didn't get to hit all my slides. I appreciate you attending another webinar, being with us today. Explore what I'm talking about, connect with us. If you'd like us to help you, check us out for another one of our upcoming webinars. You can always find them on our website where it says webinars right here. But you can see here our next one's a New Year's resolution. So we're going to talk about some small steps that you can take that are going to have some big results in this new year if you can get them into place. Then we're going to go into some more of my things that I'm passionate about with technology and forward thinking, kind of thought leadership about what's coming up with a lot of the AI stuff and changes to the economy, et cetera. And so lastly, I'll kind of leave you here. Take the next step. If you need help and you're currently don't have access to these things, talk to one of our advisors. You use this QR code here. I think Aaron's thrown up a couple offers. It's complimentary for you to be able to schedule an appointment with us. We're not a big sales organization. We're not going to try to push you. We're here to educate and to help people, and where it lines up to where it's a win-win for you and for us. We'd love the opportunity to be a good steward for you. If you just want an analysis of your portfolio, we also have a free analysis tool. Again, no pressure to join us. We'll give you analysis for free. We just find, doing things like that and helping people, eventually it does help them to see if it would be a win-win. And we end up making relationships that last, hopefully, a lifetime down. So thank you so much for spending your time with us again. Again, my disclosure is always there. But reach out if you're watching this on demand. Please put your questions in. I will answer them. We hope to be able to help you in the future. Merry Christmas. Happy New Year. If you need anything, let us know. We'd love to help. And hopefully we'll see you on another future webinar. See you then. Bye-bye.